Is something strange happening with SoFi stock? The market was moving up, but SoFi went the opposite direction, and it wasn't because of bad news or a major update. In fact, something beneath the surface may be influencing the price, and today we're going to break that down. Let's dive straight into what happened with SoFi and why its recent performance caught a lot of people off guard. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert this is not a financial advice video. Despite an overall positive day for fintech stocks, SoFi ended the day down by almost 1%, specifically 0.98%. What's especially confusing is that there was no news, no regulatory filing, and no statement from the company to justify that dip. Other companies in the fintech space actually did quite well. Upstart saw a strong 5.69% increase, and Lending Club ticked up by 0.94%. So why was SoFi lagging behind? The answer might lie in the behavior of big institutional players. During the early part of the trading session, there was a noticeable presence of large institutional transactions. Later in the day, the pattern shifted into what appears to be algorithm-driven trades, the kind you recognize from the repetitive, barcode-like trading volume. This is often a sign that human decisions were replaced by automated trading based on set parameters. What really kicked off the selling seems to have been a massive transaction, a sale of 5.79 million shares. That sale seemed to trigger a wave of selling pressure across the board. While buyers did step in afterward to absorb some of that volume, the initial drop likely spooked others. The size and timing of that sell-off suggests the seller was determined, maybe even urgent, about exiting their position in SoFi. But that raises a question. Why would anyone make such a huge sale when there's no news or catalyst for concern? Nothing was published that would explain a sudden lack of confidence in SoFi. No partnerships failed. No lawsuits emerged, no earnings reports were released, and yet someone dumped nearly 6 million shares. Digging deeper, it becomes clear that there was a significant purchase of put options alongside the drop. This strategy is often used by institutions. They buy puts, then sell off a large portion of their holdings. The stock price drops, and the value of their put options rises. It's a classic profit play, although it often shakes up the market and creates a false sense of panic. Whoever sold the shares might be revealed in upcoming 13F filings, which are expected in July. These filings will give us a clearer picture of which big funds decided to exit or trim their SoFi positions. On a broader market level, nothing major came out during the day to spook investors or change sentiment. The bigger narrative playing out was actually one of hope, particularly around U.S.-China relations. Both countries engaged in around 6 hours of negotiations, which sent a positive signal to investors that some progress might be made, especially around trade restrictions and rare mineral supply. Rumors suggest that the U.S. is feeling pressure to ease up on some of its tech-related controls in order to gain access to these materials from China. So while the broader market responded positively to those developments, SoFi's price action didn't reflect that. Instead, it diverged from the rest of the sector, a rare move, especially given that macro conditions weren't the driving force. Now, let's talk about short interest. 67,000 SoFi shares were returned by shorts, indicating that at least some traders don't believe the sell-off is justified. There are still over 10 million shares available to short, and overall, around 13.47% of SoFi's free float is currently being shorted. That's approximately 146 million shares. It's a significant number, and yet the move to return shares suggests a possible shift in sentiment, at least in the short term. When looking at the options market, the story becomes more complex. We saw about $12 million in call options and $6 million in puts. Roughly 45% of total option activity leaned bearish. One particularly notable set of transactions involved a multi-leg trade valued at over $735,000 in premium, with a key position in $13 puts expiring in July 2025. That trade suggests a break-even around $12.50, and while it's not an ultra-aggressive bet, it still reflects an expectation of continued weakness in SoFi's price. This bearish sentiment stands in contrast to the overall bullishness in the market. It's an odd contradiction, and that makes it even more puzzling. If you're seeing or hearing anything specific related to SoFi, perhaps something around lending, credit performance, or guidance, feel free to share. As of now, no reliable reports have come to light that explain the bearish stance. Now let's talk price expectations. According to current market sentiment, bulls are hoping for a rise toward $14.50 to $15 by the end of the week. Meanwhile, bears see a pullback toward $13.50 to $14, which interestingly is right around SoFi's current range. So even the pessimists don't see an extreme crash from here, just a slight downward tilt. SoFi ended the day at $14.10, putting it in a neutral technical zone between a key resistance level, often referred to as R1, and a central pivot point. The 1440 mark is acting like a magnet for price movement and could be the level to watch in the coming days. In fact, that level has been referenced several times recently as the key line for bulls to defend or break through. If you're into chart analysis, you'll notice SoFi is still holding above both its average line moving average, ALMA, and its 100-day moving average, currently around 13.48 cents. For nearly 3 weeks, SoFi has been flirting with that 100-day line, bouncing above and below it, but has generally managed to stay on top of it, which is a good sign for long-term momentum. Now, the stochastic RSI indicator suggests SoFi isn't in the overbought zone yet, but if the stock stays flat or creeps upward over the next few sessions, that could change. And once that overbought zone is reached, the first hint of weakness, whether from SoFi itself or the broader market, could trigger some volatility. That's just something to keep in mind if you're planning to enter or exit a position. So what could be the next catalyst? The fireside chat scheduled for tomorrow might not carry high expectations, but ironically, that could be its greatest strength. Even a small piece of positive commentary or a subtle hint toward future growth could be enough to excite investors. The bar is low, and any good news, even crumbs, could generate momentum. There's also reason to believe that broader market catalysts are lining up. Possible trade developments with countries like China and potentially even geopolitical shifts involving Iran might stir things up in a positive direction. Add in some upcoming economic data releases later in the week, and you've got the potential for an upward push. In summary, today's downward move in SoFi looks more like a calculated institutional strategy than a reflection of the company's fundamentals or performance. The overall technical setup remains positive. There's no damaging news, and macro conditions could provide tailwinds soon. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.